Ladies and gentlemen, K-Kim here, and welcome to the Daily Update. Hope you guys had a good day trading today. Market is down about 1.3%. There. On the S&P Nasdaq, 2.3%. Semiconductor 3. Dow held up better. Russell 2000, 1%. Transport is printing a positive number today, along with the energy. Utilities pretty much flat. Looks like banks is down 1.1%, along with the biotechs. Healthcare, 0.5% negative. Home builders down 2%. Retail down, emerging market down, Bitcoin down, gold, silver, miners down, with the miners being up a little bit, dollar up, oil up, treasury bond down, VIX popped a little bit. Let's stick with S&P 500 ETF. Spider, 65-minute chart. Here, so this is where we closed yesterday. And this is where we opened up today. We pretty much opened flat. It looks like there's a little bit of a uptick right here. And what did I talk about on the last night's update? That bulls, you must break above the short-term moving average. Because if you don't, and if you don't even attempt to fill this down gap right here. And not only that, we got rejected very, very quickly right on that short-term moving average. And that's a first hour candle there. Looks more like a bearish engulfing candle, which that candle, dark red candle, engulfs 4 hours of price action from yesterday. And with that, we were back below my micro term right there. And then micro term switching back to favoring the bears. And then what happened was second, third, fourth, fifth, little bit of a puny attempt to make a move from the bulls. Very weak. And bears sensed that, shot it down. And that's the 6th hour candle. We're back at that support at 438. That's the support that we saw just a couple days ago. We're still kind of hovering around the midterm moving average. That midterm moving average is still slightly rising, as you can see, slightly here. So we don't see any kind of decline yet. Obviously, the midterm moving average is going to take some time before it finds traction for its traction. And so short to midterm, definitely bears have cultivated an established downtrend with the lower highs, lower lows. We don't have lower lows yet. We have the equal lows as of today. Things can change next week. And this is a vicinity that the bulls want to protect. And you guys remember I talked about this maybe Monday or Tuesday, because the fact that this down move, this cultivation, this pressure, the downside pressure we've been in for about last 2-3 weeks, it's not going to be easy, clean reversal. What we talked about was that this is the vicinity. Ultimately, this entire vicinity right here, 430, 438 or so. We got the lighter support coming up at 430, 422. And that's that prior resistance right here that could potentially act as new support. It's better that bulls can find support as quickly as possible and bring back up the price as quickly as possible if they want to utilize that midterm moving average. You see right here, right here, right here, right here. And we've been tracking this moving average for the last 2 months straight. We're right back at it. And something that I emphasize, we don't want to get too precise with the price. We got slightly beneath it. That doesn't mean a whole lot. What's important is the trajectory of that moving average. So we could see this thing coming down as much as this. But let's say if this thing does come down to 428, 434, something like that, and then just reverses back up like that, and that midterm moving average continues to move higher like that, is that still valid as a midterm trend being bullish? Yes, right? So that's kind of what the midterm is going to provide, because since it's not going to move, it's not going to flip back and forth quickly like it does with the short term and the micro term, right? Just keep that in mind. However, if the bear's gonna bring it down and continue to bring it down, and we lose 430 and bears come on, that's ultimately what the bears want to do. Ultimately come down, fill this up gap right here. And with that midterm moving average actually could just come right back down and have its trajectory back down. And if we do see something like that, that down move will continue for the next month. So this is very, very important level. Bulls still can turn things around as long as if they can protect this band of support. Let's check out that oscillator, see if we can extract any more information. So here's the coiling setup. It's coiling very, very tightly. I've been analyzing this market with you on this daily update videos since the COVID 2020 March lows. And this is my first time seeing this oscillator coil like this for the last 2 months or so. First time. I don't think I've ever seen a coiling setup happening on my 65-minute chart this long. Secondarily, I have not seen my oscillator resistance getting respected and bound by this resistance for this long. Right? So this is unprecedented. We got something going on here and we just don't know as of today. Is this market brewing something for the bulls? Or is this market brewing something for much steeper, violent, bloody crash? Right? As of today, it's really hard to tell. So what we have to do is we have to go by, remember, price action is always the king and the oscillator is subordinate to that price action. So as of today, what can we say about this overall trend of things? Looking at this price action going all the way to January. Are we in a downtrend? Or are we in an uptrend? We talked about the short term right here. That's a downtrend for sure because we got lower highs and lower lows. But looking at this box right here, are we in an uptrend, downtrend? Or are we in a trendless environment? Trendless environment, yes or no? Right? Market got up, came down, got up, came down. We don't have a low. What's the definition of downtrend? Lower highs and lower lows. Do we have a lower highs? No. What is this called? Equal highs, right? So we actually have trendless market. Overall structure is concerned as of today, unless the bears break this, dismantle this trendless structure by bringing it down, making lower low. But as of today, we have to say that this is some sort of a consolidational phase, some sort, maybe basing out, right? Obviously, the enthusiastic buyers are going to argue that we might have some sort of inverted head and shoulder formation. None of that has been confirmed yet. So without the lower highs and lower lows, we can't say we're on a downtrend. Without the higher lows and higher highs, we can't say we're on an uptrend. Do we have higher highs? No. Why? Because again, that's not higher high. That's more like equal highs. Can we say this is potentially a higher low right here? Potentially, we don't know that yet. We're still looking for that call to if we do see something like that, can we end up make a higher high? Is that a higher low, higher high? Yes. Because of this structural environment that we are in, neither it's bullish or bearish in the mid to long-term perspective with the short-term bearishness that we've been experiencing here. So it's gonna be the key going forward, how this market react to my oscillator. This oscillator has been coiling. This oscillator has been building energy for over a month. Once this energy is released, you will witness the greatness of this market, revealing which direction it might go. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening and good trading next week.